Daily Forex, this is Chris taking a look at the Apple market. Apple has had a tough session on Tuesday, dropping 0.6%, pulling back from the 50-day EMA. That being said, the market is still very much in a consolidation area. And I think part of what's going on is that we are about halfway between earnings calls, and of course, we aren't close to a dividend. So traders are just looking for the next catalyst to get moving. This, of course, could come in the form of some type of agreement between the United States and China, which is a major problem for Apple itself as it chooses to produce its iPhones in China. And therefore, it causes chaos with their supply chain when we have trade wars. I think that's still a bit of an overhang on this stock, but I also recognize that traders are creatures of habit, and if we can turn around and break above the 50-day EMA, then it's possible that Apple makes a move towards the $230 level, possibly via the 200-day EMA, which is a little closer to the $215 level, where I'd expect a little bit of a hiccup. But this is a market that looks fairly cheap, historically speaking, and of course, continues to have fairly decent volume. The next earnings call is going to be in late July, the 23rd. So between now and then, it might be more choppy than anything else. But watch that 50-day EMA for a potential breakout and pay attention to $195 underneath, as it should be significant support.